is often viewed as a barometer of world trade, and on Thursday it reported fourth quarter earnings above forecasts. Maersk also expects to grow its business to track an expected 4% growth in container shipping this year. That's even as profits are set to decline and Trump's tariff threats create uncertainty. The Danish company's underlying earnings before interest, tax and depreciation rose to $3.6 billion in the fourth quarter. But geopolitical developments, including President Trump's threats to impose tariffs on the top US trading partners and access the Red Sea shipping route, could impact Maersk's revenues. Maersk said it expects an underlying earnings result of between $6 and $9 billion this year. That's compared with over $12 billion achieved last year. The company said the wide forecast range hinged on the situation in the Red Sea. It's been avoided by Maersk for over a year due to attacks by militants. Maersk and rivals have benefited from longer sailing times and soaring freight rates as ships are rerouted around Africa.
AstraZeneca shares rose more than 5% on Thursday. Investors were reassured after the drug maker said a potential fine in China would have only a minor business impact. The company said it could face a charge of up to $4.5 million in the country over suspected unpaid import taxes for 2 cancer drugs. AstraZeneca said it continued to cooperate with authorities. Investors were on the lookout for an update on ongoing Chinese probes. China is a major part of its international business and made up for 12% of total sales last year. Last December, the company named a new international executive vice president. It took over from Lian Wang after he was detained by Chinese authorities in October. Wang's arrest was followed by other revelations. It included that more than 100 former sales staff in China had been sentenced to jail time in a large medical insurance fraud case. In November, the company reported a third investigation into China involving 2 current and 2 former senior executives. It related to imports of AstraZeneca cancer drugs from Hong Kong. It said the investigation targeted the individuals only, not the company. AstraZeneca's shares plunged after the news of Wang's detention and wiped out about $18 billion off the company's value. They have since recovered and are up about a tenth this year. AstraZeneca also forecast this year's sales to be above analyst expectations. Nissan has told Honda it wants to call off merger talks. That's according to a Reuters source on Thursday. They say the Nissan boss met his Honda counterpart earlier to break the news. The Japanese automakers had said they planned to discuss integration under a holding company. That would have created the world's 3rd largest car firm. But the talks have reportedly soured amid growing differences. Multiple sources say negotiations hit a wall after Honda said it wanted to turn its smaller rival into a subsidiary. Nissan has reportedly rejected the idea. There was no comment on the latest reports from either firm. Both would only say they plan to decide their next steps by the middle of the month. Analysts say Nissan looks more vulnerable if the merger does fall through. It's been buffeted by one crisis after another and is in the middle of a turnaround plan. Over recent years, its market value has declined to around a fifth of Honda's. Such worries initially saw Nissan shares plunge when it was first reported the merger might fail. However, shares in the firm rose strongly in Thursday trade, up over 7% in the afternoon. Bloomberg has reported that Nissan will seek a new partner if the Honda plan does collapse.
Wall Street's main indexes closed higher on Wednesday as investors brushed off disappointing earnings from Alphabet and weighed the prospect of future interest rate cuts from the Federal Reserve. The Dow gained about 0.7%. The S&P 500 added about 0.4, and the Nasdaq ticked up roughly 0.2%. Google parent Alphabet dropped about 7% a day after posting downbeat cloud revenue growth and earmarking a higher-than-expected $75 billion investment in AI this year. Alphabet's results came after Chinese startup DeepSeek last week rocked shares of rival AI companies such as NVIDIA after it launched what it claimed to be a low-cost AI model. Kevin Mon is Chief Investment Officer at Henyon & Walsh Asset Management.
Clearly, investors are beginning to now question the overall health of the AI revolution and whether or not all of the spending that's taking place as it relates to AI infrastructure is warranted given the purported success of DeepSeek, as we learned just over a week ago. I would argue, however, that the bigger risk is not investing into AI, because the longer that you wait, the more likely your competitors are going to invest in AI, and that's going to move them forward significantly.
In other tech news, shares of Advanced Micro Devices fell after the chipmaker's CEO said current quarter data center sales, a proxy for its AI revenue, would drop about 7% from the previous quarter. Apple shares ended slightly lower after Bloomberg News reported that China's antitrust regulator was preparing for a possible investigation into the iPhone maker. And shares of Uber dropped more than 7.5% after the ride-hailing firm forecast current quarter bookings below estimates. On the data front, the Institute for Supply Management said services sector activity unexpectedly slowed in January amid cooling demand. Investors now look to Friday's non-farm payrolls report for January for further clues on Fed policy, with the majority of traders expecting this year's first interest rate cut to come in June.